Hello everybody, and welcome to TradeTheseStocks.com, day trading and swing trading guidance for new traders. This is your market analysis for today. Hello everybody, it is Monday the 25th of March and we will be talking about the markets today. Now, as I said in my last video, we gapped up. We were expecting to gap up, and indeed that's what happened. We gapped up in the morning. We went up just a little bit and then we sold off. We gapped up on the bailout news from Cyprus, but we sold off because this news was very sobering. So even though these guys got a bailout from Europe, everything looked great before the market opened, and then the sobering came in. People began wondering, okay, why are these people that have 100,000 plus euros, why do they need to put up 40%, 50%, 60, maybe even 70% of their savings to bail out this country that they're probably foreigners, they don't even belong to this country anyway, okay? So it was very sobering, and then we started selling off the rest of the day, and I called this low right here on Twitter of about 154.50, and what happened, we started going back up. And so if you followed me on Twitter and you took this trade, congratulations, you almost got $1 out of this. So let's go back to a couple of days ago. I want to show you what the markets are doing. In my last video, what I showed you is that we had another sell-off day too, okay? Right here, we had this sell-off day right here. This was the FOMC meeting, so we were flat for the most part on the 20th. Then on the 21st we gapped down. Not only that, we tried to regain this 20 MA right here. We continued selling and we sold off into the day. Why is this important? Why am I talking about a day? Why am I talking about the 21st? I'm talking about it because we saw the same thing this morning. The only difference, we gapped up and then we sold off. So you're going to see more of these days where we gap up and then we sell off, or we gap down and we sell off. What I'm seeing right now is more distribution, okay? And it's getting higher up there in volume. Slowly but surely we see more and more distribution, so I'm telling you the top is near, okay? Now, the only caveat to this is that this week is a holiday week. We're going to be in some low volume. So maybe we're going to be flat this week, maybe even a little bit more upside, especially into Thursday. However, next week, maybe as early as Tuesday or Wednesday, expect a correction, okay? We might only get a small correction and then maybe more upside, or maybe that's when the real correction starts, okay? So expect a little bit more upside this week, maybe a little bit more volatility based on the news in Europe. However, next week, get ready, okay? Be careful with your longs, and I will be preaching this in every single video, and I don't care if I have to repeat myself. Now let's look at the spiders for today. If you follow me on Twitter, you got very lucky today because I called out the bottom right here. It was pretty much a no-brainer. We had a little bit of a gap fill right here. We pierced it by a little bit, but nonetheless, if you took this 154.50 trade, I told you there was no confirmation here. And what happened? The market reversed. I called out the bottom and you could have gotten $1 out of the spider. So by all means, follow me on Twitter, trade these stocks, okay? Now, as I said, we're still bullish into this week because of the holiday, but remember, correction next week, more than likely, I expect it. Why? Because I'm seeing some distribution, because I'm seeing rounded tops, okay? So I'm seeing a reversal in the longer term. I don't know if it's next week or maybe even in a month. However, within the next month or so, expect some sort of reversal. Now, another thing, and now I'm going back to the daily charts. Look at the dollar chart, and I used the UUP for the dollar chart. Now, the dollar chart is giving us mixed signals. There is a little bit of bullish consolidation here, so the dollar chart could just shoot up, okay? It is into support here at the 20 MA. It could shoot up, okay, and then the markets could have that correction, or this could still break down because this is not a clear bullish consolidation pattern, so it could do either way. So watch the dollar into the rest of the week. The dollar is going to tell you everything. Now, a couple of days ago I was talking to you about FDX, about their warning about the economy and everything, and I think around this area right here I told you that it was going to start selling off. I told you more than likely there will be some sort of consolidation Okay, right now what we need to see is lower volume on this consolidation, and we're getting that in the last 2 days, so all is good as far as this bearish pattern. However, you need to give it a little bit more time, maybe at least into the end of the week, and then next week I'm thinking that FDX, based on this preliminary pattern that is developing, should get to at least the 200 MA, which is the red line right here, maybe even the gap fill right at 91.72, maybe even around $90 whole number. Okay, so watch FDX. Let's go back to Oracle. Oracle gave us horrible earnings a couple of days ago. Oracle continues to bleed. Don't touch it here. Okay, you don't want to catch this knife if it falls. Okay, big time. You can get that big red bar anytime. However, maybe a little bit of scalping or day trading, you can get it at 29.50. Some people, they kind of get ahead of this trade, and so it might even bounce at the $30 level. But if you want to be conservative, go for the 29.50, maybe a little bit lower. Okay, and you can also look for some other factors, trend lines and so forth, if you want to even find a better level. However, don't buy Oracle right now. It's dangerous to buy Oracle right now. Now, financials to me were a little bit weak today. Okay, so the market was down by about 0.4%. Financials were down by a little bit more. JPM, the leading indicator of the markets, which is a financial, was down about 0.5%. Another one I want to show you is Bank of America. Bank of America was on my radar on Friday too, because Friday Bank of America was the worst of the major banks. Today Bank of America did the same thing. Just look at this red bar. So I'm not saying buy Bank of America now. I'm not saying short it either. I'm just saying once the market starts reversing, if Bank of America puts in some sort of nice bearish consolidation pattern and it continues to be weak like this, definitely go for the short and look for the pattern. Okay, I told you about Apple, and everybody was talking about Apple crossing the 50 MA, and it was all over the news, and I admitted that Apple was looking strong. Today it put in a little bit of a small narrow range bar. Right now Apple has to prove itself. Apple has to stay above this 50 MA, so give it a little bit more time, let it consolidate. If it shoots up, let it go, that's fine. If you want to have a little bit of a scalping level to go short, look around this area. I'm not sure yet because I don't see a pattern yet, but around this 485, 485.60, maybe even 486 if you want to be conservative. But around this area right here where you see a little bit of a gap and a little bit of a pivot, okay, around 485. Okay, let's call it 485. Okay, now let's go back to the spiders. I like to give you guys levels, and let's switch to the 10-minute chart. Now the spiders, of course, obviously if it gets back to the high of the day from this morning, this will be a great resistance at 156.29. If for some reason it shoots up even higher, you can look for this area right here at 156.80 as resistance. Now on the downside, it's a little bit trickier. I would probably go for this 154.10, but however, that level is too close. Remember, in the last couple of days we've had some really major selling in the spider, so you don't want to catch this falling knife. Okay, if you see all these red bars going down, where do you want to buy? You don't want to buy on the second one, you want to wait. Okay, and that's precisely what you need to do. If for some reason the spiders start going down, go for the lower levels. Okay, you're going to be much safer. So even though this level right here, 154, is good, I think to be safer you need to go a little bit lower. Go for this level right here, 153.57. I have a couple of trend lines that I already drew in, and I'm going to have to go back in time for those and maybe even go to a larger time frame. Let's look at the 60-minute chart. And so here you have this trend line right here. If you want to look at the last day of 2012, take this pivot right here, connect it to the 26th of February. That's going to be a little bit of support. And then the bigger one is right here, this trend line that is, I believe, the 16th of November, and then again the 31st of December. Draw that one. And so that should be some really decent support on the spider. So it really depends on when it gets there. If you should get there tomorrow, this area right here where this 153.54 meets, that will be really nice, so you have a little bit more confirmation to your level. However, I would go lower. Okay, I would definitely go lower. Okay, so take this one, 153.50-ish area. Okay, if it gets there, it's only going to be for a quick scalp. Don't stay in that trade and then look lower. Okay, you have a little bit of a gap fill here and a pivot area right here, so this is going to be a beautiful level at around 152.87, maybe a pierce of 153, so around that area. Okay, the next one on the spiders is this one that I really like, 150.43, if it gets there. However, as I was saying, we're into a light volume week. However, you still saw some downside this morning, so be careful. You never know what kind of news is going to come out of Europe, and not only that, but how the market is going to react to that news. Even though we got a bailout, okay, that inherently is great news. However, just what happened after that bailout and all those thoughts, okay, that came into the market, that's what drove the market lower. So look at the reaction of the market, look at the technicals, and then make a decision on which of these levels you're going to take. And again, join us at TradeTheseStocks.com for more analysis, and follow me on Twitter because I give out day trades all the time.